warning coming in from the newspaper companies saying that if you are nervous or at all skeptical about reading the newspapers, like many health experts are saying, they just want you to be aware that the workers at the press are following the strictest hygiene protocols. They're wearing gloves and they're wearing masks. So if you do take similar precautions, it should also be perfectly fine for you to read the newspaper. And if you're still interested in newspaper delivery, do log on to wantmypaper.com and the company will organize delivery for you. That being said, welcome to the show. We have a lot lined up for you today. Cheryl, could you walk us through how we're going to begin this day?
Yes, exactly, Varun. But first up, like you mentioned, it is basically what the paper is trying to do is allay fears that newspapers are the safest source of your news. There's no harm in holding a newspaper. There's no the rumors around it that it is not safe to have a newspaper is unfounded, is unscientific. So an appeal to all our viewers, definitely if you want your papers, then please log on to www.wantmypaper.com and definitely register there to get your own copy of the pink paper, the Economic Times. But let's take you through the top headlines that is there on the Economic Times. And the first up, like you can see, this Reliance Industries has announced India's biggest rights issue. Remember, yesterday was Reliance Industries' board meeting where they spoke about their Q4 earnings and also this all-mega rights issue, the biggest in India, and one is the first one in three decades for Reliance Industries. Moving on, you have Motown may get 1 lakh crore jolts due to the shutdown. HUL announced its Q4 earnings yesterday. The sales have slipped about 9%. The company pins hopes on Bharat. You have your core output data that was dismal. It contracted by a record 6.5% in March. And government may raise up to 10,000 crore rupees, I beg your pardon. They're going to raise 10,000 crore rupees via tax-free bonds. So those are among the top headlines on the Economic Times. Varun, what are the other headlines that Economic Times is following this morning?
Right, Cheryl. So it's quite an action-packed morning, a lot going on. Now, if you go to the ET Markets page, which is page 7, there's a lot of talk about everything that's been happening yesterday. Obviously, the RIL issue you just mentioned, but also how stocks have actually had their best month since the month of April, or rather they've had the best gains since May of 2009. So in almost over 10 years, it's quite a central story. Moving forward a little bit, there's also mention of how the PM holds meet for foreign investment. So we spoke about that yesterday as well. They're really trying to relax the norms to spur foreign investment in India. There was also some concerns on the same story regarding FDI flows on account of the Taiwanese money we were talking about. It seems that the new rules do not apply to the Taiwan inflows. So that's also some fears alleviated there. Moving forward, also quite a central story, a pharma one, that's India planning a big export push for bulk drugs. So again, that's related to markets and closer to the second end of the paper. And finally, the newspaper companies themselves, or newspapers rather, seek stimulus to tide over these crisis times. So even large publications are definitely feeling the pinch.
Top headlines that's there on the Economic Times, but just let me take you through some of the stories that's there on the ET Markets page. Just hold on while I actually get the page onto that Economic Times Markets page. And yes, the Reliance Industries, definitely top headline on the ET Markets page. Reliance Industries is saying that Reliance Jio's Q4 net profit nearly tripled on tariffs hike and it's beat street estimates. So that's one of the top stories that's there on the ET markets. You also have on the Reliance Industries rights issue over here. You have Reliance Industries rights issue is aimed at raising around 53,125 crore rupees. Remember, it's India's biggest rights issue as well. You have, among others, you have the markets That's also made a top headline. You remember markets yesterday saw the biggest gain on a monthly basis since 2009. So yes, that's also one of the top headlines that we're tracking. Apart from that, ET Markets is tracking about HUL. The input cost volatility will continue. That's the word coming in from the management post their Q4 earnings yesterday. And there are some other stories as well that's there on the ET Markets page. Varun, among them is the oil prices that surged on the last day of a roller coaster. April, remember, April has been one hell of a roller coaster ride when it comes to the oil markets, considering the sharp swings in the prices that's come for the oil market. But Varun, definitely the top story this morning on the Economic Times is Reliance Industries. And give us a sneak peek into their rights issue and the details of that.
Sure, Cheryl. So the front page of the paper today talks about India's largest rights issue. Now, that's a 53,000 crore issue being planned by Reliance. Let's just remember that they just raised around a very similar figure from Facebook. So their total net debt stands at around 1.5 lakh crore. Seems that that might potentially come down by almost 2/3 if all this money goes toward deleveraging. Now, what you were also just speaking about, the volatility in the oil markets, let's not forget that they are a very key oil player, and they've actually taken a huge inventory loss this quarter. Perhaps something that has something to do with the very volatile oil prices. So, luckily for them, Jio has held up quite well. They'll be looking out for the close of the Aramco deal as well. They're also looking to hive off portion of their oils to chemicals business. So first time you're seeing something like this from a Reliance as well. First time, like you said earlier, seeing something like a weak number from HUL as well, where the volume growth wasn't as upticked as usual. So definitely strong testaments to the weak economic sentiment right now.
Exactly. We also have Ajay Sharma, our researcher who is tracking Reliance Industries very closely. He's here to take us through the Reliance Industries numbers and what the rights issue actually mean for the entire markets. Ajay, take it away.
Well, Reliance Industries came out with a set of numbers which were actually in line with estimates. But if you look at the environment we are operating in, they will go down as a strong set of numbers. They put up a very brave front as far as refining is concerned, where the expectations of the street were extremely low. The GRM number expectation was around $7. They have come in with a number of upwards of $8. So that's something to watch out for. Petchem also, it was not as bad as people were expecting. Retail took a bit of a hit, and so did Jio. A bit of a hit, but it is expected to become or normalize in coming quarters. In fact, the big point to watch out for is the fundraise. 1267 rupees a piece is what the rights issue will be priced at, and they are managing to raise 53,000 crore from this rights issue, because promoters will be participating not only of the share of their entitlement, but also if some other large shareholder doesn't want to participate. So this way, adding up 43,000 crore from the Facebook deal, 7,000 crore from the BP deal, and 53,000 crore from this deal, they will manage to raise 1 lakh crore, which is a very big feat compared to how the environment is. It will help them move forward and reduce the 1.5 lakh crore debt which they have on their books, and has become a bit of an overhang. That's the bigger message and headline coming out of this quarter. Was expected to be weak. It was not as weak, the numbers which they reported, but the fundraise which they have managed is a much bigger feat in this environment, and will continue to re-rate the stock from here on because of that.
Right, that was my colleague Ajay, who tracks Reliance in the oil space pretty closely. Now, moving forward a bit, another story that has made it to the front page of the newspaper yet again, that is the fact that Hindustan Unilever's Q4 sales actually slipped 9%. Now, this is rather interesting because let's remember the lockdown never began up until the end of March. So there's no reason why Q4 numbers should have actually taken such a big hit. With that being said, my colleague Vinny, who tracks this company and the sector really closely, is joining in. Vinny, what's your take on this result?
HUL's Q4 numbers have been much below the ET Now expectations. Now revenue stands at only 9,000 crores, down 9%, while profits are at 1,519 crores, which is down marginally by 1%, while margins have remained flat at 23%. Segment-wise, home care has seen a decline by 4%, food and refreshments is down by 7%, while beauty and personal care is down by 13%, has taken a big hit. The company did mention that they see an upswing in products like hygiene, healthcare, as well as nutrition products, which have actually seen an upswing during the quarter. But they have seen a change in the demand pattern of the consumers, and they think that this change could continue for a while, and moving forward they could see an adverse impact on the discretionary spends going forward. So ice cream, skincare are some of the products which came to a standstill during the lockdown, and right now also the sales are not quite well for the company due to the continued lockdown. Now they say that health, hygiene and food have been resilient and could be resilient even going forward. So let's see how that actually works out for HUL going forward, and let's see how that actually pans out.
All right, Vinny, thank you for taking us through HUL's number. Remember, HUL's numbers came yesterday post-market hours, so we'll see a reaction on those numbers on Monday when the markets will open. But let's move on to the auto sector, and another story right on the front page on the auto sector that is saying the auto sector will suffer a 1 lakh crore hit on back of the 45-day lockdown. So revenue of over 1 lakh crore rupees will be hit for the entire auto industry, which actually accounts to 0.5% of the GDP. It's a huge number. Remember, the auto industry is written here, accounts for 15% of the GST collections to the center. So there you go, another hit coming in for the center. But what this actually means, and to sum up the entire story, my colleague Utkarsh Chaturvedi is on the phone lines. Good morning, Utkarsh. Another day, another jolt coming in for the auto industry with regards to this particular report. They're suggesting 1 lakh crore rupee hit in revenue for the sector.
Exactly. In fact, if you look at the SIAM statement which came, SIAM had said that 2,300 crore rupees is the kind of losses which the industry is going through per day. And when you're speaking about a 40-day lockdown, it somewhere gets to that. And it's not only that one, not only the 40-day account. When we speak about the markets opening up as well, the companies believe that sales will be down at least by 50% in the days to come as well. Now we all know what auto sector was going through in the past as well. It was a prolonged slowdown in the auto sector, been a couple of years anyhow. Everybody was waiting for the markets to open up, and then the auto companies get this jolt. And I'll give you a sense of the kind of revenue jolt that will also have for the center and the states. Almost 28,000 crores is what is an expected loss of GST collections for the center. Around 14,000 crores is what the state levies will be hit. Now, if you look at the GST collections, about 2/3 of the revenue foregone will be from the GST on the vehicles, the registration tax, and the GST on insurance. They're talking about 28. Minimum 28%, and then going ahead, leading up to around 43% of tax of GST on vehicles. Then you have excise duty on fuel, which is obviously because of the registration of vehicles and the kind of vehicles which are moving on the road. If you speak about states also get a lot of money from the registration. Almost 5 to 7% of the state revenue comes from there. So clearly the auto sector had been really going under pressure. April, if you see, it was a zero sale. We'll have to really see that production has started by auto companies, but not in full swing. They're waiting for domestic markets to open, but we still have no clarity. When will the markets open? When will the dealerships open? What will the kind of sales which will happen there? And that is the reason why you're talking about almost a 1 lakh crore hit in the auto sector.
All right, Utkarsh, thanks so much for bringing us that update. And like you said, the auto sector is so integral to our economy that it's really an indicator of what's happening on the ground level. So, it's really key that we see some good relief and traction coming in here. But switching gears a little bit to the fiscal gap, the fiscal deficit, and government and RBI action. This story has also made it to the front page of the paper today on the right-hand side. Now, what it basically is about is the fact that the government is looking to raise around 10,000 crores via a tax-free bond issue. Now, this can either be done directly or via one of their PSUs. For example, an REC, a PFC, an NTPC had sold bonds a few years ago. So it could be done in a similar fashion. So the idea over here really is for them to tap the vast domestic savings pool that's available. The effective cost over here would be around 7.70%, and this will actually bring in the much needed retail participation that we keep talking about into government securities. And these tax-free bonds are deemed quite expensive by going at the current rate. So that's a brief update for you. And so, you know, they're also talking of raising temporary funds from the central bank through a WMA mechanism. So that's a more short-term kind of financing. So it'll be pretty key. The government and RBI does require money right now, so it's interesting to see that they're exploring this avenue to do the raise.
And from that news to another news, Varun, if you see on the 6th page of the Economic Times, here it is, that as China stumbles, India plans a big export push in bulk drugs. They may offer also financial incentives to help companies revive API units, occupy space vacated by China. Remember, if you go into details over here, it's written that China, actually 55% of the market share in the API market is controlled by China. So India is planning a big push to actually try and take over the market, at least grab some market share given the current scenario. So the government is actually mulling fiscal incentives, capital subsidy for reviving and restarting old active pharmaceutical ingredients units in a bid to make India an alternate hub for bulk drugs at a time when China is actually facing quality issues as well as trust issues. 55%, like I said, of the market is controlled by China. But to talk more on this, to know which companies benefit and how India will actually benefit from it, my colleague Pankaj Podar is joining us. Pankaj, take us through the details of this particular story and what it actually means.
So let me just give you a background. Before 2009, most of the companies used to manufacture their own API. API is active pharmaceutical ingredient, and it's one of the most important ingredient that any pharma company needs to manufacture their drugs. Slowly and steadily, what happened is China became extremely cost-effective as far as API supplies are concerned, and that's why most of the companies shifted their API plants or API supply to China in the near term. But what this whole corona crisis has done is that it's made them believe that, going ahead, China may not be able to supply, or it's very risky to keep, one player in terms of dependence of the most important product that you have. Earlier also, we've had some announcement from the government regarding incentivizing API business, setting up of factories here in India. But now, as you're saying, what we're picking up media reports is that, financial incentives is something which may come in. Capital incentives, may also come in actually from the government to try and set up the bulk API unit. As you're saying, over the years, China has increased its market share. It's become almost about 55-60% of the world API market, and that's why now with the trust issues, will they be able to supply, will they not be able to supply, is it safe to keep one player in terms of dependence? Probably this is a step which the industry is considering, or the government is considering, to help industry. Remember, earlier all the companies here in India had their own API, so it's not that they don't know how to make it. It's just that China was cost effective, and maybe government is looking in for financial capital incentives, because of which it even becomes at a similar cost in terms of manufacturing API here in India.
Thank you, Pankaj, for taking us through what it means for India. A big push coming in from India. They're planning big exports push in the bulk drug as quality issues, trust issues on China come up. But let's shift focus to a story that has taken all of us by shock and awe, is the fact that the stocks jumped more than 3% in April. The gains were best since May 2009. Who would have thought, looking at the performance of the markets in March and April, you would have such a great rally coming in? But to talk more on this, we have Jayesh standing by. Jayesh, take us through the market performance in the month of April. I believe we cannot connect to Jayesh this morning, but let's talk more about this. On a monthly gain basis, if you see over here, April 2020 gains is at 14% higher for coming in for the Nifty. If you see, it's the most since April 2009. So definitely a big push coming in from the market. The benchmark indices rose on back of global cues, on back of the vaccine news. Experts are highlighting actually challenges as well. There are some of the market participants that believe that it is too early to say everything is over and the rally in the markets will continue. But nevertheless, it's time to rejoice for most of the market players. Looking at the way how March turned out to be, definitely April, everyone is breathing a sigh of relief, and hopefully May should also be a good month for the markets, Varun.
Right, Cheryl, you know, it's just so interesting to see in the US and every other place in the world, it makes sense for markets to go up because countries have put 10% of GDP, 20% of GDP. So there's a lot of money floating around which can go towards purchasing equities and other securities. In India, there's been no stimulus. There's been zero stimulus virtually, especially for market participants. And for our market to respond like this, like you said earlier, is definitely no mild feat. It's been its best month in over a decade. Let's forget about what might happen going forward. It's pretty amazing that we've seen this kind of a rally here. It really shows that some people think that the virus impact is not going to be that large. Now quickly, just to get you some corporate stories, we have Nielsen that's coming in, cutting the FMCG growth outlook. So when Nielsen comes and says that, everybody listens. They're a global authority. So definitely a bit concerning, and perhaps HUL's result yesterday is the first indicator of that. This is all on page 6 of today's paper, by the way. Moving forward, restaurants are to share a loyalty program. So for the first time in India, you're also seeing restaurants forget that they compete with each other and they're getting together, and there's going to be a combined loyalty program where you can buy and redeem vouchers to get to a 25% discount in restaurants when they reopen. So clearly this is another measure of desperation. Now, moving forward, courts prefer mediation to force majeure. There's no need for me to live there. OYO to sell more loss-making hotels. So you can just look at what's happening to hotel companies. It's really hard to maintain your fixed costs when there's absolutely zero revenue. Nobody's going to hotels right now. So OYO is going to sell more of its loss-making hotels. And finally, for me today, Shikha Sharma joins Google Pay as an advisor.
Right, and those are the top corporate headlines on the Economic Times, but let's shift focus to the coronavirus headlines. And here you go, I have the Times of India page, and look what's this first story there on COVID-19. It's the Mumbai edition, remember, so it's talking about Maharashtra. The state has crossed 10,000 cases and the city has crossed 7,000 cases already. So definitely a cause of concern coming in from Maharashtra, most primarily from Mumbai as well. 7,000 cases already reached. The containment zones in the city has also crossed 1,000. So that is the top headline that is coming in the Times of India, and the rest of the top headlines on COVID-19 is on your screen.
Okay, just a final quick update for 5 headlines from the Times of India. You have the PM's push to attract firms that exit China. So we're trying to mind those clients. RGR 65,000 crore needed to help the poor hit by COVID should be on its way. Mumbai records its 3rd highest single-day toll, so that's quite alarming for us. The Maharashtra governor requests EC to announce MLC poll date soon, so we're expecting to hear something on that front. And refunds by the corona-hit airlines may get delayed, so you might not be getting a refund on your airline tickets. With that, we are completely out of time here, but before we let you go, a very special segment was coming next on what's happening with the impaired workers space. Please do listen in, and thank you so much for tuning in.
Good morning. You're watching News for Hearing Impaired. I'm Preeti. With me is Meera. First, the headlines.